Good morning. It's Friday, another week in the books, Commodity Corner. And you know, I tell you one thing, we have been pretty much spot on in this commodity space. You take a look back and you go back to when we talked about the top in gold and how gold was a sale and at every level. And as you can see now that it looks like that 1600 level has now become a ceiling. You gotta want to watch that 1550 level because I think if it breaks there, it kind of falls hard. But right now it looks to be stuck in a range between 1550 and 1600. You take a look at oil. We looked at oil at 98, and then we looked at it at 95, and now we're watching that 93 level. You know, again, it looks like it's starting to come. Now, if you're a fundamentalist, you know, we have an oversupply. The U.S. is now a net exporter of oil. You take a look at the commodity space. Take a look at the grain markets. Soybeans, wheat, downtrends. Corn, neutral to congestion, okay? So you start to take a look at all of these. Even if you look into the livestock markets, they're selling off. You had the U.S. come in last week and bail out the sugar market, which 3 years ago sugar could never go down again. These are all warning signs of trouble, that the risk is coming off the table. The biggest sign that I see here is the strength in the U.S. dollar. When the U.S. dollar, look, what's happening now, for those of you who want to know, is when dollars get cheaper, it is good for the countries for its export and helps their GDP. So our dollar is now getting expensive. So what does that mean? It means that we're going to do some less exporting because it's more expensive for other countries to buy our product. So strength in U.S. dollar is a sign of world economy weakness. It's something that you have to take note of. Now, I'm not predicting a collapse. I'm not looking for the markets to collapse. But what I want you to take note here, as money comes out of the higher risk assets, they go into safety assets. And one of the safety assets that you look at, besides the VIX, is what you watch as a monitor, is the U.S. dollar and U.S. Treasury bonds. Well, the bonds have come down quite a bit, although they're still substantially up. But the U.S. dollar has been very, very strong and continues to try to make new highs here. It's something that you have to look at and understand that that's not a great sign for our particular economy. But because other economies are failing, like Europe and others, that becomes to be an issue. But when you look at the risk coming off the table, that means to be aware and be ready to react to the next market move. So we look for to gold at 1600, we look for oil 93 to 94, and we look to continue to be a sell of the grain markets. For my weekly predictions, this week I think we have a down week in the stock market this week. I think we have a continuation down week in the gold market. I think we're down on oil. I think the U.S. dollar continues its strength. Look for the euro currency to continue to get pounded. So we look for down, down, and down in a strong U.S. dollar. Watch it. Be technical, not fundamental. Keep an eye on your charts, keep an eye on your levels, focus on the footprints. And for Friday, the Bubba Show, have a great weekend. We'll talk to you on Monday.